Have you ever looked at a big, successful company and just wondered, what is really going on under the hood? Well, today, we are cracking that code. We're talking about accounting. And forget everything you think you know about boring spreadsheets, okay? Think of this as the secret language of business. It's the story that every single company tells, whether it wants to or not, and we're about to become fluent. I mean, you see it all the time, right? A company with these flashy ads, brand new products. They look like they're on top of the world. But are they actually making any money? Is the business built on a rock-solid foundation, or is it kind of like a house of cards? It's a super important question, whether you're an investor, an employee, or just a curious customer. And the only way to get the real answer, the unfiltered truth, is to look at its accounting. This is where the story of a company's health, its performance, and its future potential is all written down in plain black and white. So what even is accounting, officially? The best way to think about it is like a company's diary. It's the whole system for recording everything that happens, every sale, every expense, every single investment. And then it takes all that raw data and turns it into a clear, understandable story that people can actually use to make really smart decisions. So here's our game plan for this explainer. We're going to start with the 3 key reports. These are the absolute backbone of the whole story. Then we'll peek behind the curtain to see how they're actually put together. After that, we'll explore how all this info fuels smart decisions, and we'll wrap up with why learning this language is just so powerful. All right, let's dive into the heart of it. If accounting tells a story, then these 3 reports are the main chapters. You need all 3 of them together to get that complete, 3-dimensional view of what's happening in a business. And here they are, the big 3. The balance sheet, the income statement, and the cash flow statement. Each one answers a different but equally vital question about the company. Okay, first up is the balance sheet. The absolute best way to think about this is like a photograph, a snapshot. It freezes a single moment in time, let's say midnight on December 31st, and it shows you exactly what the company's financial position was on that very day. And at its core, the balance sheet runs on this really simple but incredibly powerful idea, the accounting equation. It just means that everything a company owns, that's its assets, has to be paid for in one of 2 ways, either by borrowing money, which are its liabilities, or by the owner's own investment, the equity. It's a perfect balance every single time. What you have equals where it came from. Simple as that. So if the balance sheet is a snapshot, our next report, the income statement, is more like a video. It shows you the company's performance over a period of time, like a whole quarter or an entire year. You can think of it like a report card that answers the big question, did we actually make a profit? And the final grade on that report card, that's the net income. You take all the money the company brought in from sales, its revenues, and you subtract all the costs of doing business, the expenses. What's left over is the net income, what people call the bottom line. It tells you point blank if the company was profitable during that stretch of time. Okay, now this is so important. Being profitable is not the same thing as having cash in the bank. This is where the real detective work comes in. Our third report, the cash flow statement, tracks every single dollar of actual cash that comes in and goes out. You see, a company could report a huge profit on its income statement, but if the cash flow statement shows it's bleeding cash, that is a massive red flag. A profitable company can absolutely go bankrupt if it runs out of money, which is why you need all 3 of these reports to see the true story. Okay, so we've seen the final reports, the big chapters of the story, but how are they created? Let's take a quick look under the hood at the engine that keeps this whole system running so accurately. So the magic behind all of this is something called double entry accounting. Now, don't worry about the jargon like debits and credits. Just think of it like this. Every single transaction has 2 sides. It's a give and a take. If you buy a new computer for your business with cash, well, your cash goes down, but your assets, the computer, go up. This 2-sided approach is what keeps that accounting equation perfectly in balance all the time. And here's the quick journey that every single one of those transactions takes. It starts as a simple journal entry, just the initial record. Then, all these entries get sorted and organized into the general ledger, which is kind of like the master cookbook of all recipes. And finally, the totals from that ledger are used to create the 3 financial statements we've been talking about. It's this beautifully logical flow from one small event all the way to the final story. So this is not just about recording what happened in the past. The real power of accounting is using this information to shape the future. Let's see how this stuff builds from just basic reporting into a real, powerful business strategy. There are really two main flavors of accounting. Financial accounting is what we've mostly been talking about, creating those official, standardized reports for outsiders like investors, banks, and regulators. But then there's managerial accounting, and that's for the insiders. It's all about creating custom reports to help managers inside the company make strategic decisions, like which products they should launch or how to price things to be more competitive. And here is a fantastic example of strategic accounting in action. It's called zero-based budgeting. Most companies, when they budget, they just take last year's numbers and tweak them a little bit. But with ZBB, every single department has to justify every single dollar of their budget from scratch, as if they're starting from zero. It forces managers to ask, is this expense absolutely necessary for us to win? It's a really efficient way to focus a company's resources on what truly matters. We've covered a lot of ground, haven't we? From the big, glossy reports to the nitty-gritty mechanics. But let's bring it all home and talk about why understanding this language, well, it basically gives you a superpower.
So, what are the biggest things to remember? First, please think of accounting as a story, not just a bunch of math. Second, remember the big three reports: the balance sheet, income statement, and cash flow. You need them all together to get the full picture. Third, this whole system is built on a foundation of perfect balance, which is what makes the story reliable. And most importantly, knowing this language gives you the power to see what's really happening inside any business you look at.
You now have the fundamental tools to look at any company, from the coffee shop on your corner to a global tech giant. And you can start to read its true story. So the only real question left is, what stories will you uncover?